Happy Monday, everybody. I hope you had a good weekend. Today is October 9th, 2023, and this is your Monday market update. First, to dispense with the non-market information. I am still in Israel. Our family is safe at this time and taking all necessary actions to keep it that way. Due to the current circumstances here, we're not sure when we'll be returning to Chicago, but I will continue to be working from here and available for calls and video meetings, as crazy as it sounds, war permitting. So please, God, may this end soon and we see peace return. Okay, let's review last week's market action and preview this week. This is another pivotal week for the markets. We'll talk more about it in a moment, but inflation measurements as well as earnings, two of the main movers in the markets, in my opinion, will all roll out. But first, let's review last week. Stocks opened a little changed on Monday after a government shutdown that was kicked down the road. Goldilocks eco data only offset by Treasury yields going up again, and there was not a lot of focus, but any focus there was settled on a roundtable of Fed Chief Powell and Richmond Fed Head Barr. Powell reiterated absolutely nothing new. The Fed remains focused on a healthy economy. Stocks went up, yields made another run higher, stocks went down. Fed Head Barr noted that the odds of a soft landing are looking better, so stocks went back up. See what's going on here? Fitch lowered global growth estimates, market back down. Oil backed off about 2%, less push upwards on inflation, market back up. Overall, Dow was down about 0.25%, S&P nearly flat, and the Nasdaq up almost 0.75%. Market remained volatile on Tuesday as stocks gapped lower at the open. Eco data, more rate hikes possible is the comment from central bankers around the world. In keeping with the Fed head parade, Bostic was a bit less hawkish, but then the JOLTS numbers came in, very hot, yields up and stocks down. Mester got in on the action with a statement that she would likely favor a rate hike at the next meeting. Remember what I told you about the Fed heads getting out there to see what the market's going to do with their comments, testing the waters? If testing was not enough from different Fed heads, sometimes they even contradict themselves. As Bostic late in the day said that he sees one rate cut in 2024, less than the market seems to think. So the markets fell again, finished near the lows as they waited for more jobs data. Dow and S&P down both about 1 1.33%. The Nasdaq down about 1.75%. Washington seemed to be jealous that they were forgotten, so excitement back there. Speaker McCarthy was removed from office. No one at the helm. Overall, that's not a good thing, or is it? Only because work at Congress cannot really get done without a speaker. No work in the Congress. We're going to see how that works out. Stocks gapped higher at the opening bell on Wednesday as bond yields came down a bit, or at least stopped going up. September ADP report missed estimates, and eco data in Europe was a bit disappointing. Bad news is good news. The market was pretty much working off of technicals, some hopes and dreams of rate cuts, and the 10-year yield. The Dow was up about 1/3%, S&P up 0.75%, and the Nasdaq up 1.33%. Thursday saw the pre-market all over the place. Markets were digesting global eco data, this time from Taiwan and South Korea. This could be a geography lesson. Yes, the markets are always looking for a new source of global data to respond to. German exports declined also. In the U.S., jobless claims stayed low, just above the 200,000 per week. Still too strong for the Fed's liking. Markets did not like that. The limited data it got gapped lower at the open, tried for a bounce, then rolled over again. Later in the day, the Fed heads got into the action again, with Daly talking about the bond market taking care of what would have had to have been another hike, and that market expectations for the upcoming meetings are not out of line. By the end of the day, the 10-year yield bounced up again. Stocks dipped into the close. The Dow ended flat. The S&P and Nasdaq down less than 0.25% each. Friday was the big day for the BLS labor report number. It did come in very strong, in keeping with a lot of the other data from the labor markets. The market sold off, as one would expect with that number. Yields climbed again, the 10-year testing recent highs. As the details started to be examined, the 10-year came back down, and the markets actually paid attention. Under that main number was good news. Yes, the headline was too hot, but the other numbers, wage growth and unemployment rate, were actually Goldilocks. Unemployment rate was higher than expected, and wage increases dropped more than expected. Just to be clear, outside of short-term trading action, this is nothing new nor nothing good for the inflation picture. Markets are reacting after selling into the print, a bit of the sell the rumor, buy the news. Overall, the markets finished strong. After being down more than 270 points on the day and up over 400 points, the Dow finished the day up almost 1%. S&P and Nasdaq were both down at 1 point, close to 1%. And the S&P finished up almost to 1.25%. The Nasdaq up over 1.5%. For the week, the Dow was down 1/3%, S&P was up about 0.5%, the Nasdaq was up over 1.5%. A week that was all over the place. Let's go over what we'll look for this coming week. Yes, today's going to open lower, it appears. No idea how it's going to end up. Oil prices are up due to what the war that's going on here. Overall, energy concerns expected. and fear that this is going to spread around to the region. We'll have to see how all that goes. This week, as I mentioned before, we'll get a lot to chew on. It starts with what's going on here. Simply, we're going to get a big earnings kick off with the banks. And make no mistake about it, financials are still a key point to this market. We'll also get CPI and PPI, so this will really tell the tale. Tomorrow's also Amazon Prime Day 2.0. Tuesday and Wednesday. Tuesday and Wednesday. Wednesday, we're going to get FOMC meeting minutes. This has made markets move recently. Not so sure this time. We'll also get PPI on Thursday. We'll get PPI. Then Thursday's going to bring CPI. Friday will bring it home for the week with big bank earnings. That's before the open. What would a Monday market update be without a nod of those of you to the Fantasy Football League with the Fed heads? This week is, again, busy there, so get your scorecards ready. We'll have Logan, Barr, Jefferson, and that's just today. The rest of the week, we'll hear from Bostic, Waller, Kashkari, Daly, Bowman, Collins, and Harker is going to close out the week for us. We'll also get the University of Michigan data on consumer confidence and inflation expectations. I told you, I think this will move markets in the short term, but longer term really comes down to inflation and growth valuations. So just some things to keep an eye on, then we'll close out. I usually hold my lists for Friday videos, but here are two lists, some things I think can go wrong from here and some things I think can go right from here. We all need to watch all of these things. What can go wrong? Continued spike in yields, slowing growth, inflation bouncing back, more rate hikes, more geopolitical surprises, oil surges, and bank stress. What can go right? The return of the data that's just right, the Goldilocks stuff, not too hot, not too cold. That needs to come back. Immaculate disinflation comes back as well. And any good geopolitical surprises, and maybe the signal that everyone's waiting for that the Fed is officially finished. So with that, I'll finish this up. I'll be back on Friday with a planning video. Please be in touch with any questions. If you want to help out the soldiers in Israel, please contact me. We are working with some orgs here on the ground to get the necessities to them. A lot to tell, but this is not the place for that in this video. Please stay safe wherever you are. Be in touch with any questions.